Welcome back to Squawk Box. We have been covering the Wall Street Reddit rebellion and the market volatility all morning long. Billionaire tech investor Chamath Palihapitiya says he closed out his position in GameStop one day after joining the trading frenzy. In an interview yesterday on CNBC, he addressed the role of regulators in this environment.
I think this is an example of if you are going to so massively oversell a company to the extent that you're selling 40 more shares of that company that don't exist, and all of a sudden other folks are like, hey, wait a minute, this is going to get squeezed, and they buy it. That's just a smart trade. Retail saw it. Wall Street missed it, and they paid the price. So maybe, to your point, Scott, what regulators should do is say, hey, wait a minute, how can we allow companies to be 140% short? That doesn't make any sense. Maybe that's what should happen.
Joining us right now on the phone is former SEC Chairman Jay Clayton. Jay, thank you so much for joining us. I think we're all grappling with trying to understand what's happening here and what it means for the markets in a larger way. You just heard what Chamath had to say. What do you think of that?
Well, look, Andrew, you are grappling with it. And let me just say I've been able to sort of tune into the show over the last 25 minutes, and you're doing a great job grappling with it because there are many issues at play here. And Chamath identified one of them, which is our stock borrow market, short interest, how that's monitored. And look, let me make a point here. In terms of short interest being monitored, the U.S. markets are probably the most transparent. But there's always room for improvement. And that's an area where I think there is room for improvement in terms of modernization of how the basically how the short market operates. We can get into that in more detail, but it's just one of many good points that have been made over the last several days as people have watched this situation.
So, Jay, if you were in the seat today, and I know there's a transition taking place, Gary Gensler has been nominated for the role that you used to sit in, what would you be doing about all of this? Would you be doing anything?
Well, look, let me just say, Gary Gensler knows markets very well. Allison Heron-Lee, who's the acting chair, she knows markets very well. And more importantly, the 4,500 men and women of the SEC, they are certainly monitoring situations like this all the time. And I have confidence that they are looking for specific misconduct, but they're also looking at what this means for regulation overall. I'm not going to second guess. I've had my time in the seat, but I have great confidence that Allison and her team and Gary, should he be confirmed, are going to do a good job here. But there are things that your segment raised a lot of issues here. There is a laudable sentiment that people want to be connected to our economy, that they want to participate. But there's also great danger here. Anytime stocks depart from fundamentals, they return eventually, and people get hurt. And I just want to say, look, professionals in this marketplace, people who serve retail customers, they ought to be dotting their I's, crossing their T's, thinking about whether leverage is appropriate. I've seen people pull back on margin, take a breath. These are times where you need to take a breath as an institution and ask yourself, am I doing everything right?
Shepard Smith here. Thanks for watching CNBC on YouTube.